Well, welcome back to Finance Uncut. On today's episode, this will drive silver beyond $50.
I think production will increase. The supply chain will respond. I mean, for example, rental cars right now are going for $200 a day, sometimes $1,000 a day. And that's because the rental car companies sold all their cars last year and now are having to rebuy them. And there's a chip shortage, so that's causing the supply of automobiles limited and the prices going higher. I think that will be rectified in the next year or two. But the government has been so expansionary in their policies, both monetary and fiscal policy. They're increasing demand. They're providing all kinds of money at very low interest rates. And that's finally having an effect. Also, people are getting all kinds of unemployment compensation. They're not going back to work. That is a problem as well. So you put that all together and it's creating an environment that's highly inflationary. I'm predicting a return to the 70s inflationary environment, perhaps even stagflation for a while.
So Mark, the 70s had double-digit inflation. What's going to get us there this time if you think we're going to return to that era?
So one reason was the energy crisis. We had a huge shortage of energy, and you had OPEC raising prices tremendously, oil prices, and that's possible to happen. I mean, oil is already up to $75 a barrel. So energy prices rising sharply could be a big factor in pushing other rates up, whether it's food shortages. There's all kinds of events that could occur that would cause double-digit inflation. And boy, what a change, considering that we faced a period of deflation or disinflation that has lasted for many years. So there are a lot of these outlying factors, black swan events that could occur that would drive prices higher. And we had the pandemic that caused the Federal Reserve to expand the money supply dramatically. The money supply went up 26% last year. If the dollar crashes, for example, that's going to cause prices to rise dramatically. So there's a lot of factors that are unpredictable and that could play a role in pushing us back up to double-digit inflation. I'm not predicting it. I'm just saying there are these black swan events that could occur.
So what's going to push silver beyond $50? The incredible shrinking dollar. So we've just had CPI come out very high, yet we know the real numbers are even higher. However, the question is, well, why isn't gold and silver rising? Well, we'll come to that in a second. So the inflation climbs higher, or CPI, as the price index rises 5.4%. We know that we're paying more for food. There's food shortages around the world. We're seeing what's happening in South Africa. Cuba are protesting. There's going to be significant social unrest happening. I heard this morning in the US that certain parts of the US are 98% in drought. We know what that's like in Australia. And it's only going to get worse if the Dems get their spending plan passed. And you can see just here the things that we kind of need, like food and energy. Look how much they've gone up. So here's the chart of US CPI, both headline and core. And look, the headline, that's the highest for 30 years. The highest number in 30 years. And as Mark Skousen said, he thinks we're going to go back to a 1970s style stagflation. Now, have a look at what that stagflation was like back then, the CPI. Now, make note, have a look at this chart. So you can see CPI goes up in the late 60s, then it comes back down. Okay, then it shoots right back up, and it comes down, still to a fairly high number, then shoots back up. So what you're going to see out there in the media from the Fed and from Wall Street is that this thing's just transitory. So yeah, we're going to get these spikes of CPI, and then they're going to come down. And that's when all the deflationists are going to come out and say, well, here we go. It was just transitory. You know, we're now moving into deflation. But don't be fooled. Don't be fooled, friends. So this came out from Bianco Research, CPI excluding food and energy. And what he did was, instead of a 12-month annualized change, he did a 6-month annualized change. So it just gets a better number on the trajectory that things are on. So excluding food and energy, he says that CPI is at 6.17. That's pretty high. And all items, 7.33. So once again, this is the highest numbers in 30 years. And also the PPI, the Producer Price Index, posts its biggest annual gain in more than 10.5 years. And you know what? It's going to continue because US Treasury continues to issue more bonds. And central banks are going to continue to increase. We've seen what the ECB has said in Europe. We know that the Fed are going to have to purchase more and more of these. So as this Biden administration, but also previously the Trump administration, as they do these big deficits, and there's no sign that they're going to slow down anytime soon, Who really wants to own the bonds? Well, the only ones, at some point, the only ones that are going to buy them are going to be the central banks. And that's when the currency is in big trouble. And we're close. And these numbers will just, when that happens, the CPI is going to be off this chart. But fund managers agree with the Fed, as most say inflation will be transitory. So the Bank of America did a survey to fund managers, aka Wall Street, and it was about 72% from memory said that, it's just going to be transitory. So these fund managers think that, the government in support with the Fed, and this is around the world, so it doesn't matter which country you're in, that they can create all this new currency, and then there's not going to be any inflation, that there's not going to be any CPI increases, and that the stock market is just going to continue to go up and up and up and up. I mean, that's their dream. But these are fund managers. Corporate America, though, they don't think it's going to be transitory. So you've got Wall Street, the speculators, and then you've got people that actually produce things. So the CFOs were surveyed, and they are seeing inflation. They are seeing the real inflation, and they're saying it's not transitory, and that the Fed has ultimately now lost control. So who do you want to believe? Do you want to believe fund managers? Where they're going to say, push the narrative that, we're going to have deflation, that it's just transitory. So Fed, don't stop the liquidity. Keep the liquidity coming so we can throw it into the stock market and into assets. Because if CPI is not transitory and the Fed and central banks are forced to taper and raise rates, then guess what that's going to do to their precious little asset prices? Economists surveyed said that they see higher inflation here to stay for years. And don't rely on markets to see inflation threat, says Summers. So Jesse Felder tweeted this: at times when inflation has significantly accelerated in the past, such as in the 1960s, markets have lagged rather than anticipated developments. And now even BlackRock. So BlackRock's think, I do not believe inflation is transitory. Central banks around the world want the economies to overheat. Why? Well, you got it. We got a debt bubble. Russell Napier, one of my favorite guys I follow. This guy is 10 times smarter than me, 100 times smarter than me. Have we ever seen a country in history persistently running a broad currency growth rate at 10% that didn't have inflation, or CPI, at 4% or above? The answer is no. Now, Russell Napier, if you're not aware of him, for 20 years he's been a deflationist. In the last 12 months, he is completely jumped ship. He has completely turned around and he is on the inflation camp. In fact, he's talking about financial repression, that we are entering a time of financial repression. So probably he's more aligned with Lynn Alden that we're going to see a 1940s style where treasuries, bond yields are kept to the floor, and perhaps even having some funds forced to buy them, while CPI is much higher, and so you know people that put money into these treasuries when they mature, say the 10-year, when they mature, they're going to have a lot less purchasing power than what they started with. So this is financial repression, and Russell Napier is one of the smartest guys in the world. And another smart guy, I think one of the smartest guys in the world as well, Chris Cole, Mr. Volatility Man himself, said, according to the second law of thermodynamics, everything in the universe is transitory, including inflation. So what is transitory? Well, it simply means not permanent. So inflation is always transitory. Our lives are transitory, aka not permanent. So when the Fed speaks this, when central banks speak this, transitory term, well, of course they're right, but they're playing silly games. And when people finally wake up that inflation is not this transitory thing, that it's not simply going to come down and we're going to go into deflation, that it is real and the purchasing power of the dollar is going to fall, then people are going to wake up and they're going to move out of that fiat currencies right across the world, but in particular the US dollar, and they're going to move into gold and silver. And this, I believe. So here's the thing. Everyone believes the Fed that thinks that it's transitory, okay? And it's going to come back down and we're going to go into disinflation or deflation. Not the CEOs and CFOs that run companies. They're not the smart people. They know this thing is not transitory. But when everybody else wakes up to the fact, guess where they're going to flock? Gold and silver. And I believe at that point, well, I believe silver will take out its all-time high. But anyway, that's just my opinion. What do you guys think? If you like this video, give me that thumbs up. Hit that like button. Really do appreciate it. If you haven't yet subscribed, do so, and hit that notification bell so you get all my videos when I upload them. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.